When was the last time you filled up your car and actually thought about where that price came from? You pull up to the pump, you see a number, it's different from last week, maybe higher, maybe lower, and then you just swipe your card and move on with your day. But here's what most people don't know. That number on the pump is not decided by your local gas station owner. It's not decided by your state government. That price is determined by something much larger, something happening thousands of miles away in a region most Americans rarely think about. It's determined by oil and who controls it. Right now, at this very moment, there are oil tankers crossing the Persian Gulf. There are pipelines pumping crude oil through deserts. There are refineries processing that oil into gasoline. And all of it is flowing toward one destination, the rest of the world. The Middle East produces about 30% of the world's oil, but it holds 48% of the world's proven oil reserves. That means for the next 50 to 100 years, if humanity keeps using oil the way we do now, the Middle East will be the most strategically important region on Earth. And that is the foundation of everything we're about to explain.
Let's go back to the beginning, the early 1900s. For thousands of years, the Middle East was important to world trade. It was the center of ancient empires. It was the crossroads between East and West. But in the early 20th century, something changed everything. Geologists and oil explorers discovered something beneath the desert sand, something that would reshape global power for the next 100 years. Oil. Massive, unprecedented amounts of it. In 1938, oil was discovered in Saudi Arabia. In 1927, oil was found in Iraq. In 1932, in Bahrain. The Persian Gulf became the most valuable piece of real estate on the planet. But here's the key detail that nobody explains. The people who lived on top of this oil didn't have the technology, the capital, or the industrial infrastructure to extract it themselves. So what happened? Foreign powers came in. British companies, American companies. They signed agreements with local rulers. They brought drilling equipment, they brought engineers, and they began pumping oil out of the ground at enormous scale.
Now here's where the economic reality gets important, and this is where the seeds of conflict were planted. The oil companies and Western governments made agreements with Middle Eastern rulers. On the surface, these looked fair. The ruler got a percentage of profits, the oil companies got access to the resource. Everyone seemed to win. But the math didn't work out that way for ordinary Middle Eastern people. The profits largely flowed to Western corporations and Western governments. Local populations saw their national resources being extracted, but didn't see corresponding wealth or development in their own countries. Imagine if a foreign company came to your town, discovered valuable minerals under your land, extracted them, and sent 90% of the profits overseas. You'd watch your resource leave while your community stayed poor. That's what happened across the Middle East for decades. This created something crucial, deep economic resentment, a feeling that the West was stealing Middle Eastern wealth. That feeling would shape everything that came next.
By the 1950s, something shifted in the Middle East. A new generation of leaders emerged, leaders who were tired of foreign powers controlling their nation's most valuable resource. In 1951, Iran's Prime Minister, Mohammad Mossadegh, did something radical. He nationalized Iran's oil. He said, "This is Iran's oil. Iranian people will benefit from it, not British oil companies, not foreign shareholders." The response from Western powers was swift and severe. The British government, which had made enormous profits from Iranian oil, orchestrated a coup. They funded opposition forces. They destabilized the government. By 1953, Mossadegh was out, and a more Western-friendly leader was back in power. The message was clear. If you control the oil, you cannot be independent. If you try to take back your own resources, we will remove you from power. This wasn't subtle, this was direct, and it taught every Middle Eastern leader the same lesson. The West will use whatever force necessary to maintain control over Middle Eastern oil. Fast forward to 1960. 5 oil-producing nations made a decision that would change global geopolitics forever. Saudi Arabia, Iraq, Iran, Kuwait, and Venezuela formed an organization called OPEC, the Organization of Petroleum Exporting Countries. Here's why this mattered so much. OPEC was the first time oil-producing nations united as a cartel. A cartel is a group of producers that agreed to coordinate prices and supply to maintain profit margins. Think of it this way. Imagine all the coffee farmers in the world decided to meet and agree, we will only sell our coffee at a minimum price. We will control how much coffee gets to market. If any of us tries to undercut the price, we all punish them by cutting them off. Suddenly, coffee buyers don't have a choice. They can't shop around for a better deal. They have to accept whatever price the cartel sets. OPEC did exactly that with oil. And for the first time, oil-producing nations had leverage. For the first time, they could say no to Western oil companies and Western governments. This was revolutionary, but Western powers didn't see it as progress. They saw it as a threat. October 1973. The Arab-Israeli War breaks out, and this time OPEC was ready to use its power. The Arab members of OPEC announced something that shook the world, an oil embargo. They would stop selling oil to any country that supported Israel. They would reduce global oil supply, and they would watch what happened. What happened was chaos. Within weeks, global oil prices quadrupled. Gas prices in America shot up from 33 cents per gallon to over $1. Lines formed at gas stations hundreds of cars long. People waited hours for gasoline. Some stations ran out entirely. There were fistfights. There was panic. The American economy, which had been cruising along smoothly, suddenly seized up. Inflation exploded. The stock market crashed. Unemployment rose. And all of this was caused by a decision made by a group of countries thousands of miles away that most Americans couldn't even locate on a map. This was the moment when the world understood something terrifying. Oil is not just a commodity. Oil is a weapon. It's more powerful than tanks or missiles. It's the lifeblood of the modern economy. Control the oil supply, and you control nations. Middle Eastern leaders had just proven that they could hurt America without firing a shot. They could do it by controlling oil. Western powers were stunned, and they made a decision that would reshape global economics for the next 50 years. After the 1973 embargo, America realized it could not afford another oil shock. It needed to regain control over oil markets. And the solution was brilliant. America went to Saudi Arabia, the world's largest oil producer, and made a deal. Here's what the deal said. Saudi Arabia would agree to sell all of its oil exclusively in US dollars. In return, America would provide Saudi Arabia with military protection, weapons, and diplomatic support. It would be an ironclad security guarantee. This agreement later expanded to include most OPEC nations, and it created something economists call the Petrodollar system. Now, let me explain why this was genius, because this is where the hidden system becomes visible. Before this deal, oil could theoretically be sold in any currency. A country could buy oil with British pounds, or German marks, or French francs. But now, if you wanted to buy oil from the Middle East, you first had to exchange your currency for US dollars. Think about the scale of this. The world uses roughly 100 million barrels of oil per day. every single barrel has to be paid for in dollars. That's trillions of dollars of transactions annually, all of them in U.S. currency. This created a permanent global demand for American dollars. Every country in the world suddenly needed to hold massive reserves of U.S. dollars just to conduct international trade for energy. And that changed everything about American economic power. Analytical, explanatory, confident. Here's why the petrodollar system gave America unprecedented economic power. When your currency is the one that everyone needs to hold in reserve, you gain advantages no other country has. First, you can print more money when you need it. If America needs to spend more money than it collects in taxes, it can simply print more dollars. Other countries can't do that. If they print too much of their own currency, the value crashes because nobody needs their currency. Second, you can borrow money at lower interest rates. If you're a country that everybody needs to do business with, banks are more willing to lend to you cheaply. America gets better interest rates than any other nation because lenders know dollars will always be valuable. Third, you can run large deficits without immediate consequences. America spends trillions of dollars more than it takes in as tax revenue. Normally, a country that does this would face a currency crisis. But America doesn't because the world still needs dollars to buy oil. This is the hidden subsidy that keeps the American economy functioning. This is why the U.S. can spend more than other countries and still maintain a strong currency. This is the real power behind American economic dominance. And it's all built on one foundation. Oil must be sold in dollars.
Strategic, serious, commanding. Now, let's talk about the other side of the petrodollar deal, the security guarantee. America promised Saudi Arabia military protection. But what does that really mean? It means But this protection came with a hidden cost. Because when a country depends on another for its security, it also gives up a degree of independence. Saudi Arabia and other Gulf nations gained military strength, advanced weapons, and protection from threats. But in return, they aligned their policies with American interests. This created a system of mutual dependence. The U.S. needed stable oil flow priced in dollars, and oil nations needed protection. On the surface, it looked like a partnership, but underneath, it was a system of control, influence, and balance. And the moment that balance is challenged, everything begins to break.
Not every country agreed to this system. Some leaders began asking dangerous questions. Why should oil be sold only in U.S. dollars? Why should foreign powers influence their economies? Why should their natural resources be tied to another country's currency? And slowly, some countries started to challenge the system. Iraq, Libya, Iran. Different countries, different leaders, but the same idea. Control our own oil. Control our own money. And what happened next is where the pattern begins to emerge.
In the early 2000s, Iraq made a decision that went largely unnoticed at the time. It announced that it would begin selling oil in euros instead of U.S. dollars. At first glance, this seemed like a technical financial change, but in reality, it was a direct challenge to the petrodollar system, because if one country could do it, others might follow. And if that happened, global demand for U.S. dollars could weaken. Then came 2003, the Iraq War. Officially, it was about weapons of mass destruction, but none were found, and critics began asking a deeper question. Was this really about security, or was it about maintaining control over oil and the currency system behind? Libya tells a similar story. Muammar Gaddafi proposed something radical, a new African currency backed by gold. And he suggested oil could be traded using that currency, not dollars, gold. If successful, this could have changed the balance of global finance.
a shift away from dollar dominance, a new system. But in 2011, Libya collapsed into conflict. NATO intervened, and Gaddafi was removed from power. The gold-backed currency idea disappeared with him.
Now you might be thinking, what does this have to do with me? Everything, because when oil prices rise, transportation costs increase, food prices go up, electricity becomes more expensive, inflation rises, your daily life becomes more expensive. And all of this connects back to global oil systems. Every time there is tension in the Middle East, markets react instantly. Oil prices rise, gold becomes more valuable, stock markets fluctuate, investors move money quickly. This is not random, this is money responding to risk. Most people react with fear. They panic, they make emotional decisions, but others see opportunity because they understand the pattern. They know where money flows during uncertainty. But the world is changing. Renewable energy is growing. Electric vehicles are rising. Countries are slowly reducing oil dependence. The question is, what happens when oil loses its dominance? And what happens to the system built around it? Power is shifting. New alliances are forming. New financial systems are being tested. The world is moving toward a more complex balance, and the oil system may not stay the same forever. Power is shifting. New alliances are forming. New financial systems are being tested. The world is moving toward a more complex balance, and the oil system may not stay the same forever. For investors, this means one thing: awareness matters. Understanding global events helps you make better decisions because markets don't move randomly. They react to systems. Once you start seeing the pattern, you can't unsee it. War, oil, money, they are connected. Not always directly, but always underneath. So next time you see headlines about conflict in the Middle East, don't just see war. See the system behind it. See the movement of money. Because in the modern world, power is not just about weapons, it's about resources, it's about currency, it's about control. And once you understand that, you don't just watch the world, you understand it.